Hello everyone, welcome to my channel. My name is Orlando, and today we're going to be talking about why life insurance is not an investment. It really blows my mind every time. I would say half of my clients that I see, I get a personal financial statement from them. And a personal financial statement is, let me just go ahead and explain so you know what I'm talking about. It's basically a form that you fill out that will, break down everything that you own and basically come up with your net worth. So I get these forms from my clients, and in the portion of investments, I see about 50% of the time someone puts on there life insurance. Life insurance is their investment. Some of them put term, some of them put whole life insurance, some of them put universal life insurance in there. And I just go, oh, no. And I would say, if it's not whole life or universal insurance, I'm pretty sure it's whole life or universal. Definitely term. If it's term, I tell them to take it off because you can't claim it as it being an asset for you. You can't say, oh, well, I have $1 million term life insurance and that basically means I'm a millionaire. Like, it just doesn't work that way. A lot of people think that. A lot of people think if I go ahead and I buy life insurance for X amount of dollars, that's what my net worth can be. And that's not it. It doesn't work that way. The asset isn't live until the money is in your account or you have control of the money. You will only get the money when you die and the other person will get it, not you. So you can't claim the asset as your own because you don't have it. And you can't cash in the coupon basically until you're dead, which then you can't claim it, right? So that makes sense, right? So a lot of people put that on their personal financial statement thinking that it's going to basically puff up their net worth. And I go, nope, you got to get that out of there. And then when it comes to the other types of insurance, the whole life or universal, those are just bad investments, guys. Bad investments. I can't tell you enough why not to do this. They're just horrible investments. And if you break down the numbers, it just does not work in your favor. So one of the things that I love to mention to people is that when an insurance agent comes to you, and an insurance agent, what's their job? An insurance agent job is to sell you insurance. Now, what is the number one thing that an insurance agent is going to try to get you to buy? Are they going to try to get you to buy a term? Probably not. Are they going to try to get you to buy whole life or universal insurance? Ding, ding, ding. That is probably the number one, very first thing that the person is going to tell you. They're going to give you a call and say, hey, I got this great opportunity for you and you're going to make so much money and a great investment. I just want you to think about this from a sales perspective. If someone's coming to you trying to tell you that this will be the best thing since sliced bread and it's life insurance. And life insurance companies, the whole goal is for them to make money on the premiums. Do you think that the insurance company is going to lose gobs and gobs and gobs of money by giving you a great investment product to put your money in to where they will lose or even split the profit with you? No, that's not going to happen. So the insurance agent's job to sell you, I know it sounds bad, to sell you the product that will make them the most money and the company the most money, not you the most money. And I know that's, you probably get friends and family who are trying to sell you these things, but I promise you, insurance agents make more money off of selling whole life, universal insurance than term life for sure. For sure. So if you look at it that way, it just tells you that it's not a good investment. But the real question about this is well, what type of insurance is the best insurance for you? And should you get insurance? And my answer to that is yes. You should definitely get term life insurance. Term life insurance is basically you get a 20, 30-year insurance. If you pass away or you die during that period of time, then the policy is paid out to whoever your beneficiary is. So for me, we have $1 million policy and I use it for risk management. So I have a bunch of properties and when I pass away, I don't want my spouse to be left with a bunch of debt. So I use it as risk management that if something happens to me and I pass away, then my wife will get the $1 million, and she can use that money to pay off the debt that we currently have. And she could basically live off of the money that the properties make. She wouldn't necessarily have to worry about, oh man, we've got $1 million+ in debt, or up to $1 million in debt. She could pay all of that off and then just reap the benefits of all of our rental properties. So I use it as risk management, and I tell others to do the same. Do not think that if you purchase life insurance, that is an investment and that a bunch of money that you're just gonna collect, right? The money isn't for you. The money is for protecting your assets, protecting what you have built or what you're going to build. And that is the best way to look at it. Not that you're gonna make a bunch of money off of it, or that you're gonna pass away and then your family is gonna be rich after you pass away. That is kind of the worst way to look at it. You need to look at it as a risk management situation. You're using it as a risk management tool. You're using it for a situation where you're saying, you know what? If something happens to me, my family will be taken care of. The stuff that we've built throughout our lives, will be taken care of. It will take care of my debt. My wife and kids won't be crushed by the debt after I leave, as far as managing it and all that other stuff. They will just have everything that they need to take care of all of the risks that you guys have built together. And so that's the way that I use life insurance. I'm gonna go a little bit deeper of why I'm such against universal and whole life insurance, other than the fact that it's obvious that the insurance companies and sales agents want you to go that route because they're gonna make more money, right? But let's just look at it from a numbers aspect, right? So you're paying almost 20 times more for a whole life or universal life insurance policy. You go ahead and you pay into it, and the fees associated to a universal or a whole life insurance for probably the first 2 to 4 years, you probably lose 100% of all of the money that you put into it for premiums. You lose probably all of it, and all of those fees go to life insurance company. So you're paying all of those fees up front. You're paying 20 times more. Your rate of return on those, even though people think like, oh wow, the face value of them is gonna be great when they give you this little chart. When you look at the numbers and you look at the rate of return on these things, they're like 3 to 5% rate of return. I mean, if you put your money into stocks, an index fund or a mutual fund or something like that, you took your premiums and you put in it, you probably would make 8 to 12% on that. Why would you want to invest in something to where you will lose your premiums once you pass away? They won't even transfer over to your beneficiary. Your beneficiary will only get the face value of whatever the policy is worth, but everything that you paid into it disappears. Why? That just doesn't make sense at all why you're doing that. I mean, it's like a savings account, basically. You're basically investing in a savings account. A little higher savings account, but to me, it's a worse savings account because you're paying all of the fees associated with it. And there's so many rules when it comes to these whole life insurance, universal insurance. If you read all the fine print in the back, which no one does, you would see that you got to meet so many requirements, and this and this and this has got to happen. And if you're not into numbers and that's not what you enjoy or whatever, if you don't like reading dry fine print in the back of an insurance policy, then you're not going to read it. And then when the time comes for you to actually benefit off of the policy, your mind is going to be blown what the customer service person tells you. Oh, you can't get this or you can't get that. And you'd be like, well, I've thought that for the whole time I've had the insurance. And your mind will be blown. So long story short is to just avoid doing the whole life universal and stick to term life insurance. Term life insurance is much easier to understand. It doesn't have an investment component that's very bad, and it's cheaper. It just makes no sense to get into whole life or universal insurance. So once again, guys, if you got value out of this content, please hit that subscribe button, notification, and like button. It really helps out my channel as always, and I'll see you guys in the next one. Thanks.